Well, indeed, we'll stay with inflation figures. Yes, it's an important figure, and when it comes in, we need to break it down from all angles to understand what it means for everyone. Inflation rose slightly in May, that's no more news, but it highlighted persistent price pressures across the economy, despite signs of moderation in monthly price increases. Now, according to the latest Consumer Price Index report released by the National Bureau of Statistics, headline inflation increased to 15.93% in May from 15.69% recorded in April. On a month-on-month basis, inflation slowed to 1.75% from 2.13% in April, indicating that the pace of price increases is easing. Food inflation stood at 16.96% year-on-year, while core inflation, which excludes farm produce and energy, came in at 16.82%. The NBS attributed movements in food prices to changes in the cost of staple items, including onions, maize, tomatoes, yam, cassava flour, pepper, and other agricultural products. Now, this report also shows that urban inflation reached 16.07%, while rural inflation stood at 15.60%, despite the slight rise in headline inflation. Longer-term indicators point to improving price stability, with average annual food, urban, rural, and core inflation rates all lower than levels recorded a year ago. Well, let's stay with this development, like I said earlier, and I'm bringing in Dr. Ayo Teriba, who is the Chief Executive Officer with Economic Associates. Thank you so much. Good afternoon, Dr. Teriba. It's good to have you on the show.
Good afternoon, Tolu.
Thank you so much.
Thank you very much.
All right, then. Well, let's get to the conversation very quickly. I'm going to ask you first, what were you expecting? Everyone expected an increase. Was it up to what you thought we're going to see, looking at the figures? There was a decrease month on month. Basically, can you make us just understand what you make of these inflation figures as released by the NBS, all of the parameters surrounding it?
All right. Thank you very much, for the invitation, and good afternoon, viewers. Well, it's the third consecutive month of the U.S. War with Iran, and for wartime that disrupted the flow of supply of oil, 0.24 percentage point uptick in inflation in Nigeria in the month of May must be emphasized to be very mild uptick indeed. So we should emphasize the fact that, there is a mild increase, in the year-on-year rate of inflation. So inflation accelerated mildly. For wartime, what other countries are getting is much more than this. So we in Nigeria should be very happy. And that's the third consecutive month of very mild increase in recorded acceleration in inflation. And a memorandum of understanding has now been signed, which probably now brings that war to an end. And we could go back to the trajectory of the decelerating inflation that we have been enjoying in Nigeria throughout 2025, and which took a break, a mild break since January. So my hope was that we shouldn't pay too dearly for the war. And now that we've seen the third wartime month ending up this mildly, let's hope that now that oil prices are now declining on the news of the MOU, and Strait of Hormuz hopefully will be reopened tomorrow, and the flow of oil through that strait should ease the supply of petroleum products decline, for that significant decline in the price of oil. which should mean that we may expect, better inflationary outcome for the remainder of the month of June, and perhaps much better outcomes for the second half of the year. Tolu, is my view.
So that seems like we are getting to that point where things will begin to take shape like before. But I want to ask you, considering the fact that Nigeria is a country coming out of reforms, how do you take this inflation figure that takes us a bit back? At the point we're seeing a decline already, but many won't even understand that it was a fallout of the Middle East crisis. Some thought it was just the reforms and all of that. But to you, considering the fallout of the reforms and the impact of the inflation, what would you expect from government? Now, I like to ask that question because of the fallout of the reforms. Even IMF acknowledges that fact.
Well, that Nigerians should congratulate ourselves and also commend the government for the resilience that the economy has exhibited throughout the 3 months war. Somebody says 100-day war, 107-day war. That the fundamental economic variables remain strong. The foreign reserve figures, the news on foreign reserves continue to be good. We haven't had any recent updates on net reserves, but we've had positive updates on gross reserves, and the news remain very good. There's no reason for us to expect that the news about net reserves will not be good. The exchange rate, which is evident to all of us, we see the exchange rate on a daily basis, and the news remain favorable, positive. The Naira has held through since December. It's stronger today than it was in December. So Naira appreciation is good news for every Nigerian. It's good news for the validation of government reform efforts. And the stock market is also there. Around the world, the volatility, the stop and go in the conversation about whether the war will end, whether the peace, the memorandum of understanding will be signed or not be signed, had meant that markets had been slightly volatile, including the Nigerian market. But if you see where the stock market ended in December at 99 trillion naira, and where it is today, still well above 155 trillion, still more likely to return to 160 trillion, more likely to rise above 160 trillion. That's positive news. So if those variables are not adverse, there's no reason to expect that inflation is going to be adverse. And there's no reason to expect that GDP growth figures will be anything different, from continuing to accelerate. So that's very good news, for Nigerians, for Nigeria, and for the government.
Before I go to projections and reprojections by the IMF, because this is also something that we should look at. They've given projections and reprojections. What about issues around structural issues that are affecting or fueling inflation in this part of the world? Some would tell you that Nigeria's inflation is not only fueled by, yes, external forces, but also we have structural issues, infrastructure issues, and other issues that we also need to address that would help us with regards to inflation. For example, food inflation. Doc, I would like you to also react to this. How well is government faring with regards to addressing these structural issues that affect, of course, pricing and all of that across the board?
Well, if you have any structural issues affecting inflation, those issues must have taken a break since December, because in spite of an evident war, that had, led to a near doubling of pump prices of petroleum products, inflation has remained at 15 point something %, for 5 months. So what structural issues are we talking about? And of course, our food prices are subject not just to seasonal forces, but they're also subject to whether we are, fasting, in which, ironically, food prices, rise more when we are fasting because everybody's talk of food more than the wood when they are not fasting. We just had the Salah celebration at the end of May, and you know what that meant, for the price of some food items, particularly meat, so these are, you can't call those structural forces. These are just mere seasonal forces. So if in spite of the acknowledged structural problems that we have around transportation, around energy, supply infrastructure, inadequate transportation and energy supply infrastructure, we've seen significant shock to fuel prices. Diesel at 2,000 naira or more per liter, petrol at 1,300 or more per liter. And, we got mild response, to food and transportation prices. And now that the war is over, that those fuel prices are likely to go back below half of where they were in the months of April and May, we will expect that food prices will take another deserved break and return to single digits. Where they were, before the oil shock, was triggered, by the war. So the news for food in Nigeria is even better than the news for the headline inflation. And the other, force, the other factor that I would like to draw your attention to is that since March, some states in Nigeria have been recording single-digit inflation. In April, as many as 10 states reported single-digit inflation in spite of the headline that stayed above 15. And the latest figure released for May, about 7 states reported single-digit inflation. So life is getting better. For some Nigerians, the pressure points remain heavy, high-density places, heavy population places like Lagos, Kano, and the rest of them. For a few states, and you find that by the time the June figures are released, more states will drop below, 10. We join the single digitly. And maybe, by the end of the third quarter, perhaps the headline itself will be in single digit. So I do not think there is any cause for alarm on prices in spite of the structural forces that did not stop the inflation from dropping from 35 that we recorded in November 2024 to 15 that we have recorded in December 2025, and we are still sub 16, 5 months after it dropped to 15, and in spite of 3 months of adverse effects of the war on oil and on fuel price, we are still, below 16. Now that war has ended, hopefully. Let's hope we can now hope, that both the headline and the food price will return to less than 10. Yeah, that single digit will get, will be here with us in a month or two. And that should be hooray, as far as inflation and concerns about inflation are concerned. That does not say that we shouldn't take concerted efforts to address the infrastructure, the bottlenecks with transportation and with fuel and energy supply.